What's up guys, Ready CJ. This is the Cross Capital YouTube channel. So I'm gonna help you guys with a easy to follow MACD strategy. And this settings is not out of the box. I'm gonna show you exactly what settings to use, entries and exits, where to place your stop, all of that. Give you now guys an idea on how to trade, how to approach the market. Depending on what time frame you trade, it doesn't matter. You can open up any chart and put on the settings, very standard, and there you go. And you can check it out. You do your own due diligence and your back testing and stuff. Check out if this will help you with your trading. If it's in a short time frame, you're going to do some nice scalp trades. If it's a longer term, daily charts, whatever time frame you use, 4 hours, 1 hour, it's going to be a bit longer, maybe swing trades, I would say. So let's jump into it. I'm going to first of all, I just want to tell you guys, this is not my own settings, it's not my own personal strategy. I found most of the information I found on SMB Capital's propfirm, so they do provide a lot of great information, so all the credit to them. I'm going to explain to you guys. Also, I've changed one or two small things I've changed, and this will help you. So first of all, I've opened a normal candlestick chart. This is the NASDAQ, E-mini NASDAQ March contract, and I'm currently using Webull charting. So you can use TradingView or NinjaTrader or Quantower, doesn't matter. So going to the MACD, I've put on the MACD, and I'm going to quickly explain to you guys what the MACD is all about. So the MACD is the moving average convergence divergence. It's one of the most simplest and most effective momentum indicators available. The MACD turns two trend following indicators, two moving averages, into a momentum oscillator by subtracting the longer moving average from the shorter moving average. As a result, the MACD offers the best of both worlds, trend following and momentum. So it obviously it fluctuates above and below this zero line, so it's not, because of the MACD is unbounded, it's not particularly useful for identifying overbought and oversold levels. So it's not created in that way. So it basically looks at two moving averages and then plotting the MACD signal line. So this would be then the yellow line is the difference between those two moving averages. So currently it's using a 3 and a 10, the fast and the slow, two moving averages, and it plots the yellow line. The signal smoothing, the 16, that's a moving average on top of that signal line. So that's different. That's the blue line here. So looking at the 3 and a 10. So if you go to your normal chart and you open a moving average, a 3 and a 10, you will see when it crosses like that, the fast above, for example, above the slow, that's where the signal line, the MACD signal line, crosses above zero. So there's no difference. Exactly that. So it's trading above zero here because the fast is above the slow. Again, this side, when it crosses below, crosses down on the negative side. So indicating momentum, basically. So when it's an uptrend, it's going to trade above the zero. When it's a downtrend, it's going to trade below the zero line. So like this, you can see the market's trending down from here to here, and that's where the signal line trading below the zero here. Blue line is obviously just an average, moving average of this yellow line. So it's like a derivative of a specific signal line here, plotting. So how do we use it? How do we trade it? So I'm going to show you guys. So I'm going to look for shorts below zero line and longs above the zero line. So first of all, the blue line crosses down here. So there's a lot of momentum to the downside then. So after a while, so then we wait for the yellow line to go above and then across below. Like here. That's across below. Zoom in a bit more. Get there or there. Let's say that side. That's... just gonna quickly draw it for you guys. Vertical line here. Let's do that. So that's where the cross, or actually that's where the cross happened. The next candle confirming that. So you can basically go short on that open there. So where do you then place your... I'm gonna just quickly draw something else here. A horizontal line. Like a train. Let's do this. That there. That cross there. That's the short. Where do you place your stop? You place your stop where the MACD turned. That top. So it's on this specific place here. Again, quickly draw that. So that's the amount of risk you take. So this is a 1 minute chart. So you can trade on whatever time frame. You can have a look at it and try to look for trades. If you find better settings, please let me know in the comments below. Have a chat and hopefully you guys can help each other. So we have that short here at this level of, let's say, 80 or 81. Stop at just above this, so let's say 88 or 89. That's 8 points. So if you took that short there, you can always scalp it out. 70, it's almost 10. 80 to 70, that's 10 points there for a short. You can always exit when it crosses above again. So yeah, here's another short on this specific time here. Again, I'm gonna show you guys with this level. That's the short there on that open. As it opens, the yellow line is below the blue line, and the blue line is on below zero, trending downwards. So we'll see probably on like bigger time frames, you're gonna find that these things doesn't move as quickly, and the trend can be longer. So that's a short. Stop is turn, so you can put your stop here with that signal line turned. But these are shorts. Again, taking profit, you can still wait for the cross here. Just your final exit if you wanted to trail the thing. So that's where you still need to manage your position. So I'm showing you great entries. Let's look for a long. Everything short, you can take a short here, again short here, and that's your final exit or cross there. Now, no crosses. That thing, the blue line is turning above the zero, slightly above, very close to the zero line. So we needed to move a bit further away. Again, here we can see short. Let's try and look at a couple of short signals in here. The last one was here. That's a final trend upwards. So this thing trying to go up. Here we go. Late afternoon in the NASDAQ. Looking for a long. That's a long signal there. Blue line is above 0. Cross. Let's plot the thing. That's the plot long. Stop is here at this turn. We just stop below that candle or this candle. Could have stopped out there. That's a 10-point risk stop loss you could have taken. So it's open here at 72, 73s. You just stop at 63, 70, 62. Let's say you took your loss there, which is fine. Again, new trade there. That's your entry somewhere in this candle. Let's say you missed it. Long at 70, that's the turn. That's your stop loss at 63, 64. That's a 6-point stop with a nice uptrend here from let's say 70. Let's call it 70. Going up to 90, even higher, 96, 95. So that's a 26 point move in the market. So again, depending on how your trading style is, if you want to trade short-term scalps, this is great for the Nasdaq. If you want to trade the 5-minute, 3-minute, 1-hour chart, bigger moves, bigger stops, probably need to just, again, how many contracts you risk, that's up to you. So let's say, for example, the last trade was here. Exit, final exit there, for example, and then you never took a long here. So that's a cross above, but the blue line is below the 0 line, so that's not a long. Waiting for a short, that's not a short. That is very, very marginal because it's very close to the 0 line. We need something a bit more going away from the 0 line. That's a better momentum trade you're gonna take. These ones moving so close to the 0 line is probably gonna be sideways market like this. Probably not gonna make money. Waiting for something more clear. That's the close of the market. So, but yes, definitely something in it. So if you took this trade here, stop loss there, probably stopped out or took a small cut, small loss there, and then the new day. So that is how you trade, or an example for a MACD strategy. I hope this helps you guys. Right, let me know in the comments below how you would have traded this. You can open another chart if you want, see if it works better on other stocks, even stocks. You can probably like trade the stocks the same way. Again, here, long entry here, long entry here. Didn't really cross over to the top upside. So this you didn't take because it didn't cross. Could have probably taken this one. Let's say we've taken this one, but it's very close to the 0 line again. With clear direction. Short trade here. Stop there. That's the 225.50. Entry is this one here on the open, 225.20. So that's a 30 cents stop on Apple, taking that short, dropping down to 24.70 cents. So that's a 50 cents move. The downside, still in a downtrend. Could have taken this short here as well. Couple of moves in it, couple of scalps, couple of cents for a short. Again here, not a short. Stop there, couple of points. So it's nice to see the direction in using the MACD, and you can always know where your stop is. So on the turn of the MACD signal, that's your stop, and you can trade different sizes and scale out of your position as you go into profit. Alright guys, that is it from my side. This is the MACD strategy, and hopefully it's simple enough for you to manage your trading. All the best with your trading, and see you in the next one. Cheers.